Hello and welcome to Macro Mondays, brought to you by David Gockstein. I am your host, Landy, and today is April 27th, 2026, and we are starting by looking at CFDs on WTI crude oil as, we have seen now for a couple of days, or a couple of sessions, I should say, that WTI has continued to hold around the 94 to 95 level on a closing basis and has continued to spike in and around the $98 per barrel level. And this leads me to actually want to discuss something very, very important as the United States blockade of Iranian oil is getting to the point where there's some very important things that are happening there for Iran as this blockade continues. And more importantly, what is going on in the rest of the world, Europe and Asia especially, and then, of course, the network effect throughout the global economy to the United States. And I'm going to present a little bit of a case today. We're going to stare at this oil chart for a moment while I kind of work through my thoughts on this. First and foremost is that some estimates have about 3 days or 72 hours before Iran. And this is kind of a fluid situation in terms of, estimates of when they might have to start shutting in. And what that means is that they have to stop pumping oil because they don't have anywhere to store it. And all of the measures that are being taken, such as taking the old super tanker and filling that up, and then using overland routes via rail to essentially store or ship oil, is still leading to a large problem for them, which will likely start resulting in a shut-in. And once a shut-in begins for a country like Iran that has heavy sour crude, this is potentially damaging not just in the near term, but in the very long term for them as a nation. And essentially what ends up happening in a situation like that is that for heavy sour crude, once an oil well is turned off and the well itself reaches around ambient temperatures, you get a buildup of paraffin wax. You get a large amount of sulfates that then also begin to basically be a problem inside the well as it starts to cone or begins to fill with water. You get you essentially get what's known as sour corrosion, and this is where you have not precipitation. Precipitation of asphaltene is also coming out, which causes problems as well. But then you start to get destruction of the actual the equipment used to drill the well, the pipes themselves, as hydrogen sulfide begins to settle out into water, in addition to water coning, and like all kinds of these things begin to compound in these wells when they are not pumping or active. Once the tree is shut down, it needs to come back up within, I would say, along with a lot of the experts, is about 72 hours, in some cases even less, depending on the environment. And this can cause some major long-term effects. We're not talking about like near-term effects. We're talking about the maybe hundreds of thousands of barrels per day of oil production coming out of those wells ceasing, which means that even in the most rosy of situations, once that occurs, and let's say there's deals that are done, that's a major financial hit for them, right? Whether it be black market or even, coming back online and back into the world economy in some way through some sort of a deal, is very damaging for them. But more importantly, even in the most rosy of situations where let's say there was some sort of a deal and the strait was open and oil starts flowing through the strait, we have European nations, especially. This is going to hit European nations hard. It's already doing so at this very moment. But European nations Asian nations, and even Russia for that matter. A lot of people talk about, well, the whole Iran situation helps Russia. Well, their overland pipelines can only, pump so much, right, to get to, of course, China and other places, right, with whatever other nations they want to deal with in terms of trade in that regard. Um, the they've been getting hit hard by, of course, Ukraine. Still, a lot of people forgot that there's that whole Russia-Ukraine war going on. Um, and Ukraine has been aggressively attacking their oil infrastructure. So yeah, and they're striking much further in than they were prior. So they are definitely taking advantage of this situation. And what does this really mean? Even if the strait were fully open and there was a deal done today and everybody was happy in the most rosy of a world, we would still have a lot of catching up to do to even meet current demand in Europe and Asia. And this is a big problem because it's already starting to lead to what's called demand destruction. And demand destruction is at first market driven, right? Prices rise, people, stop filling up as much. They start rationing kind of how much money they're going to spend on energy. This has an effect on, residential and retail as well as businesses. Then we also have, voluntary style policy stuff, sometimes mandatory stuff that starts to come into play in terms of rationing. And then, of course, there's voluntary rationing, which has already been called upon very early on in the conflict in Europe, especially. And the issue right now is this is no longer short term, right? This is long term. So we're going to continue to see demand destruction, and we'll have to see what kind of possible mandatory measures might be taken by certain European governments, especially. And we'll keep an eye on Asian nations as this goes on. Now, what tends to happen when you have demand destruction is you get a slowing economy, which means, GDP starts to take a nosedive, which then leads to other risks like stagnation of the economies. And when there's already been prior stresses to these economies and you have a very dicey inflationary situation, this causes a lot of physical pressure and monetary pressure, right? And in this case, governments start losing tax revenue and all of the rest, right? This is also when you start to hit demand destruction, even if prices were to fully normalize right now, it has a long tail effect. And right now, we're not anywhere near price normalization. We are starting to see that for the volume of tankers coming to the United States, whether it be in the Gulf of America or to Alaska, for oil and natural gas, it takes time, right? You incur a higher cost. For shipping, it takes much longer. We're talking weeks. And this is likely going to drag on for quite some time. And I wouldn't even forecast under the most rosy of situations once, you see normalization of traffic through new trade routes and new shipping routes. It takes a while for this to take effect, which means demand destruction continues. And the reason that I bring this up is because a lot of people are looking at oil staying steady above some key levels, but yet the markets, in particular NASDAQ and SPY, continue higher. While I don't think this is known as a bid to cover, right? Is you're getting flight of capital into the United States economy because it's stronger. The United States is a safe haven effectively. Why? Because right now we are the number one producer here in the United States of oil and natural gas. And of course, we also import Canadian, Mexican, and now Venezuela. We're a large importer of Venezuelan product as well, where we refine and then resell in addition to that, right? And with even that can get strained up depending on how many ships are coming in, how much is being sold on contract, and like all that kind of stuff. So it will have a network effect on the United States, but because the United States is the world's top producer in this regard, what you start to see is a flight to safety, that being the United States economy and markets. And what we're seeing is a bid to cover. and we could continue to see that happen. And one of the biggest reasons why is we have lower domestic energy costs relative to the rest of the world, especially right now. I don't know if anybody in the U.S., if you're in the U.S., you might not be looking around the world and tracking to see what's going on. You know, a lot of the complaints here in the United States has been like, well, gas prices are so high at the pump. They're not even as high as they were back in 22, right? Like this is we're not even hitting those levels, and there is major issues going on in terms of the energy sector. It's under a lot of stress, and the reason why we haven't hit some of those levels at the pump, it doesn't mean that we won't, by the way. But one of the main reasons why is because very quickly in 2025 we became and retook that spot of being the world's largest producer of oil. Now that's of course not even accounting for the fact that we also import, refine, and then maybe even re-export or use here in the United States. Now, there are some states like California that choose to import their oil stupidly because that's been a policy from the green agenda in California. So that's one of the reasons why prices are so mismatched in California. Although there are other states that are starting to feel the pain a little bit. It is not even near the levels that it was. And now I'm not making a political point in that regard. It's just that I think hindsight gets a little bit mismatched when people are looking at and talking about where things currently are and how bad it is. You might not remember, but not that long ago, prices were actually significantly higher at the pump. That doesn't mean that they can't go significantly higher, but one of the reasons why we haven't felt that impact is because we are the number one producer of oil and natural gas. And then, of course, with Venezuela now exporting to the United States, where we are then refining their product and either reselling it or keeping some here at home. Most of it's being resold, by the way. But that also has that plays a big factor. Now, the big thing is capital flight, and that's actually what we're seeing, and it's called bid to cover, and that's why we see markets continuing to push on to the upside. Now, Bitcoin I'll get to, but I wanted to kind of get this out of the way to kind of set the table for looking at markets here. Now, if we do continue to see, and one of the things that we are continuing to see is we have this downtrend that technically you could make an argument was broken on the close above 95.44 here. I would just say any oil for WTI is strong above around 90 to 95, right? If it continues to hold this level, more likely going to try to the upside for the overhead resistance that it keeps tagging 98 to 102. And if we do see closes above there, I'd look immediately to 105 to 107, anywhere above there, 110 to 112. And obviously, when looking at bands above 112 here, we would be looking for an expansion into overhead resistance, this big zone, which is a macro area of interest overhead between 115 and 130, right? And, I'd initially look for runs of the highs by the upper third standard deviation where we're coming in right at the high. And then above there, I'd be looking for expansion into 130 as a very viable area. And then any breakout above there, essentially 140 to 150 up here, another macro area of overhead resistance. If we did see right around 88 to 90 on the bottom side get closed below, I would be looking for the lows to come back into play. 84 to 86 being a key area. And then anywhere below there, I'd be looking 76 to 78 right around the swing low. Now, we are going to continue, very likely, going to continue to see the spread between Brent and WTI stay consistent. And that is really it really points to what I'm talking about in terms of the demand destruction that is already occurring and may likely turn into de facto government policy that is no longer voluntary. Especially in Europe. Of course, we could see in other Asian nations, and particularly we might see that in China. But so far, we haven't heard too much, and got to be careful about what you hear in China as it relates to the truth. more likely we would see that this is likely going to continue to have an effect on European nations and apply a lot of pressure. And it doesn't matter even if things normalized as of today. Like everything's great again. Everything's free flowing and at 100%. And the United States is handling the overload, and then the straits back open, and everybody's going. No, it's still going to take quite some time. And I'll be honest with you, I think the United States is trying to shut in the Iranian wells. I don't think they would really want that, because I think that in any kind of a deal, the United States wants to be a piece of it, much like Venezuela when it comes to the oil. But if they got to shut it in, I guess they're going to shut it in and hold that blockade. But we'll see what happens, because if there's really smart people in industry, in the oil industry, that have been tracking this and have been estimating that they're probably 72 hours away from having to do a shut-in, if not already shutting down some wells. And then the clock is ticking for 72 hours. They got to get them back up and running, which means that once they're shut down, to be honest, I don't see them getting back up and running within 72 hours, and likely permanently losing a lot of production capacity. That would be devastating for even the most, for the economy in general, even in the most friendly type of, let's say there was total regime change to some sort of democratically elected Persian government that, ousted, all of the elements, in a perfect world. It would be absolutely devastating. So either way, it's going to be devastating to the Iranian regime, but also the Iranian economy. So this blockade, you must remember, is very different than the economic sanctions that had already previously caused some problems for them years ago. This is on a whole nother level, and they had a lot more ways to store and ship at the time that they do not have now. That is the reality of the situation. I don't care what your politics are. This is reality, and that's what we talk about when we are talking about markets and the potential implications. This spread between WTI and Brent, I think, will continue. We could potentially see flip-flops back and forth, but I think that we are going to see a spread between the two, depending on supply and demand for each. And in this case, the demand destruction is what is driving prices higher in U.S. markets. I'm going to focus on NASDAQ and SPY. And SPY in particular, we're continuing to see a bid to cover. And essentially that's a bid, and I'm saying that wrong. And the only reason why I point this out is because I'm using language that maybe if you're in markets or you're a professional, you'll be like, that's not what it is. But it's a bid to short, essentially. Is you keep bidding up until you get into a robust short position, which means that this could go significantly higher if shorts tend to get squeezed in some of these areas on breakouts. And I've mentioned this before. We got the 715 call above 710, look to 720. Anywhere above 720, I would be looking, 725 pretty quickly is fair game. But as we see, the bands are very spread out here. Closes and continued closes above the upper first at 709 to 710. This might as well be 710. It's probably going to be even a little bit above 710 when SPY opens. I would be looking for this to potentially head. And you can see SPX was 7,173. So it would be the equivalent of 717. I'd be looking for 730 to potentially even the upper second by 735. I know that sounds a little crazy, but that is the potential on continued closes above 710. If we do see 710 dropped, though, pay attention to the swing low of the consolidation as this kind of melts up. Anywhere below 700 to 702, I'd be looking for 690 to 695 as the main area. Next area below there, you can see the basis now working its way to 680 to 685 on corrections. That would honestly be a much needed correction. Could we get one this week? Absolutely. That is possible. But I would just be aware that as long as it's trading above 710, it still has the ability to continue up into the 720, 725, potentially even 730, 735. I would take it 5 points at a time on SPY. And if we did see that area dropped around 680, that's where we would have to look for a potential gap fill between 671 and around 660 or so by that lower first standard deviation. That would be the next big area. And, same deal. We're seeing the risk trade persist, right? Bid to short, bid to short, bid to short. And what we see is it's capital flight, and it's already beginning, and it would only intensify. So, I'm of two minds. When the bid to short is ready to unwind the spot side of the position and ride the shorts down, that's when things get very, very interesting, right? When we see an unwind, where do we correct to? Is it going to be just a correction and then continuation to the upside, or is it going to be absolute devastation to the downside? I think that the demand destruction within European nations and Asian nations will continue to drive capital to the United States economy and markets. And we'll see how right I am on that. Upside potential towards 28K is absolutely in the cards. And you're probably like, that's crazy, but that is an area to pay attention to. Now, it potentially even more, 28.1 to 2 on the upside, as long as we see continued closes above 26.8 now. If we do happen to see the low side structure here at 26.4 to 26.5 dropped, we've either already tested or will likely test, very likely test, the 25.7 to 8 to that 26.2 region, that support on the high side structure over here. Anywhere below there, I'd be looking for, 25.5 to 25, 4. And then if we start to see that fall apart, we're starting to look back to, 25K on the swing low right here that found support to an actual gap fill, which would be between 24,750 or so down to the weekly here with pit stops along the way at like 24.5, but really right around 24 to 24.2 in the weekly down here by the lower first standard deviation is where I'd be looking. We've continued to see the corrective structure on Dow. And we did see that the upper first standard deviation was lost, but the highs are still in play on any kind of a breakout above, 49.6 to the high here at 49.850. Anywhere above there, 50K to 50,500 is in the cards. That would be a swing of the highs, potential continuation above there. Absolutely could be in play. Now, we do have a bit of a local gap here at the 48.8 level. If that area is dropped, we're likely already running 48.5, 48.4, and then headed down to the basis somewhere around the upper 47 to 48 region. If that was lost, especially 47.5 down here by this area of interest, I would be looking for a gap fill all the way back down to the upper 46 46, 7 to 8 region around the lower first standard deviation. Now, we started out with oil. I gave you my spiel about how I'm viewing markets and what I'm observing in markets, more importantly, and what the importance is of paying attention to the energy markets. Like the energy markets and energy underpins the global economy and infrastructure. Okay, I don't care if it's inside of the Swiss system or outside of the Swiss system. It has a network effect everywhere. While the United States might not bear the brunt of the impact like Europe and Asian nations, we will feel that network effect. But I do also believe that in this case, we would see that capital flight into the United States, as we are still seeing that, but it's coming in through the market side and through likely deals and negotiations that we have seen cooking, right? And even being moved forward, like what was moved forward on April 10th by the EU. So now let's get over to Bitcoin. Bitcoin has now fallen out of, and it did run the highs, much as we kind of talked about last week. I put the downtrend line here that everybody's been talking about just because it has become such a hot topic, is look at it broke the downtrend. Well, I mean, yeah, it's technically broken the downtrend on the close last week, but it broke this trend line. So everybody's making a big deal about this and telling everybody that they were late. And now it's holding the basis band on a back test for the weekly. So obviously everyone was late, right? Look, this is not a bullish structure, in my opinion. This is a local trend shift with a higher low and a higher high. The only way that I start to flip on this is back above $98,000. And you can see that the upper second standard deviation has now moved down to around 95.5, 96K, depending on the chart here on spot. It's at 95.5, right? So one of the things that I have talked about is overhead resistance. If we do see 78 to 80 reclaimed on a daily, we can start looking to like 82.5, which is the monthly close of the monthly candle that put in the higher low swing at 74.4. You can see that even if we did start to break through that area and go and test the mid 80s, we have the upper first standard deviation now directly in line with the lower high close over here. Okay. So just be aware, this is a bearish setup still, with, higher lows and higher highs. This is not building bullish divergence, and we need to see bullish divergence on, our relative strength indicator here. Essentially what we're seeing is that it's expending a lot of strength to get little back in return, and we would rather see the downtrend weakening with, lower lows as it's relative to other lower lows, creating bullish divergence, meaning that the downtrend is actually weakening. In this case, we're getting mean reversion. So we reverted back to the mean, even got above it here for the basis, which is the 20 simple on the weekly. Doesn't mean a whole lot right now. And again, if we were to see closes that can hold above $98,000, even then, you didn't miss anything, because we're going to get higher lows from there. And those are the higher lows that would actually be the important ones at that particular moment. In this case, this is bearish until proven otherwise. It's a bearish retest of an area that was lost. Now, if we were to see things come back down and a high put in, I'd look right back into the range on any closes below, the 70 to 72 area, which is the top side of the tighter range, which I'm going to talk about in a moment, show you in just a moment. I would be looking back to 68 to 69K. Anywhere below there, we're testing right into the lower first standard deviation, and I would take that as a range between $65,000 and $67,000 by the lower first here. Anywhere below there, the lows are getting ran again, 62.5 and under, down to 58 to 60, which would be the actual low side structure over here. You can see that the lower second is down there as well and kind of tracking sideways. So this is set up in a range right now. And if you're bullish, you want to see Bitcoin hang out and get a compression on the weekly between the lower first and the upper first, kind of bracketing that basis band if you are a volatility trader. And this is where, actually, let's go to the weekly. I'm not paying attention to the magic line drawing of breaking that particular trend line, because remember, it still continues to the downside. So even if it goes lower, then you know what? Let's point this out. Is like, let's say that we do get a move back up, right? This is what a lot of trend line enjoyers won't tell you. It's like, okay, we've got this downtrend. And look at, we broke the downtrend, right? Well, let's say that we continued up further, and like, let's say $86,000, is you could still continue right back into a downtrend that is lower lows, and they'll still be, talking about the trend line, right? And in that case, that would be a swing of 58 to 60. So look, you haven't missed much. So ignore the ones telling you that you missed it. If you're here paying attention to any of this right now, you're going to be just fine. Let's go ahead and talk about the daily here and get rid of the trend line. No, let's go ahead and talk about the daily. Yep. We can get rid of the trend line, or we can hide it, because I'll probably reference it again. We'll save it later. We'll save it for later. For another time. But we are going to turn on local support and resistance, areas of interest, and talk a little bit about this. So 78 to 80, talked about this area for quite some time. This is a bearish retest of that area, and we are starting to see that our Bollinger Band set is nice and curled up in a way that actually would be supportive on initial moves or sharp moves back to the downside. But understand that we did just close essentially right on the swing low here at 77. We got a close open right around that 77. What was the close actually? 77,364, which is just above the higher low swing, but it did break the higher low swing that was put in over the weekend and higher low close that was put in over the weekend. So when zooming in here, what do we need to see? Well, as long as Bitcoin's in the strong half of the bands, perfectly fine. And that is on any retest of 74 to 76 here. It's fine, but you would want to see closes more on the top side of that and above the basis band to continue to push to the 78 to 80 region, which on some charts we did see $80,000 hit. Anywhere above there, the top side of the range here is around that 80,500 to 700. If we did start to see Bitcoin trade above there, look right to the monthly overhead by the daily upper third standard deviation. It would be expansion into that area. You can call it 82.5 to 83. The close open for the monthly higher low structure overhead would be that 82.5 or so. But you can give it some room, 82.5 to 83. Any expansion above there, we're looking 85 to 86. And potentially to that lower high swing that was there with a common higher low at around $89,000. So 86 to 89 would be the next big area. Now, strong position would be Bitcoin holding here or coming down to test and hold in and around the 74 to 76. And I do believe that if we see Bitcoin get another close over 76, we're going to start seeing that lower first and basis perfectly bracketing this area of interest. Anywhere below there, it's all about 70 to 72, top side of the tighter range, where we did see after the big buyback off of 60K, a structural high put in off of this swing at that 72.2 region. And then we came down into higher low, lower high, lower low, lower high, lower low before we got a trend shift that came up to put in the highs at 76 here. So things would get a little dicey for the bulls back below $70,000 because that would be expansion down into the support area and likely coming down to test the ever important zone between 68 to 69K. Anywhere below there, we're right on top of that weekly lower first standard deviation, and very highly likely we'd have to entertain trips all the way back to the bottom side of the range around that 65 to 67 that I was talking about on the weekly. Anywhere below there, we're looking right back to the bottom side of this tighter range between 65 and 62.5, and then full on expansion, of course, down to 58 to 60. This is not the daily setup for that right from here. In fact, this daily setup does favor, until proven otherwise, and especially look for closes below 74, and even losing this daily zone here, you could even argue around 73.3 to 73,750, kind of that $500 zone or so. You could argue that holding up around there would be just fine, but closes below 74 or those areas is going to start to look like it wants to test into 70 to 72, and that's where you'd want to see the bulls hold up for the potential chance to kind of compress again and maybe re-expand through overhead resistances if we haven't already tried to do so. But if we did start to see that, we're looking, for right where the bands are, these areas, 74 to 76, 70 to 72 are the areas to look for during quick moves to the downside as supports, level by level. And then, it's not set up for just an absolute nuke right from here, although weird things have happened in the past where we have seen absolute nukes. Beware of a compression in these areas that continues to reject and then get expansion through those downside levels. That's what I'd be paying attention to. I would also pay attention to oil, because if oil does reclaim and break that, continue to break back into some of the high side of the local structure on oil, we'll see Dixie start to move back up into some important overhead zones. I'm not going to show those today. I'll show them on the check-in on Wednesday. But if we do start to see, 98 to 102 being reclaimed, and then an auction. We see WTI in particular auction up to the 105 to 107 level. I think that's where we start to see the bid erode. We start to see that we get some shorter term profit taking and selling, and then tiny unwinds on the other side of the short positions that are being accrued on risk assets in NASDAQ and SPY. And then we start to see markets correct or get that wider correction, which could potentially lead to Bitcoin falling through some important levels. So keep an eye on oil. If you see a reclaim of the 98 to 102.5 region, just look right to that 105 to 107. Holy crap. Siri's always listening. That's funny. So for those that maybe didn't hear it, the background, Siri decided to pick up and play kids music from 1998. So anyway, yeah. So just be aware of that because it could very quickly run this. This is all bracketed for a range right now for oil. Very quickly, we could potentially see 110 to 112. And that means that, you can just look in the news if you do start seeing that auction that way. And that would erode the bid for risk assets, and that's going to include cryptocurrencies. So that's all I got for you for Monday. I hope you learned something. I hope you like and share this out there if you did learn something. If you disagree, that's okay. It's okay to disagree with my analysis and my take on things and how things are kind of setting up. And I welcome differing points of view, as many of you already know from a lot of the Spaces events that I do during the day, typically during the week. You can find me on David's show, either Money and Politics or The Breakdown, which is at 12 p.m. Eastern Standard Time, 9 p.m. Pacific, 9 p.m. I always say 9 p.m. 12 p.m. Eastern Standard Time, 9 a.m. Pacific Standard Time. During the week, I will typically be on there about half hour after he starts. And then, of course, you can catch me on Spaces events. And I do appreciate all of you that support the content and like and share it out there. And I encourage you to keep doing so. Looks like X is recovering slowly. All of a sudden, like my follower count is back to where it was, which is weird. It took a dip for a while and then engagement got nuked. And now it's kind of recovering and back to normalcy. I don't know what Nikita's doing, but, apparently there was a lot of legitimate accounts that did get suspended or were completely gone or people couldn't log in. I even got some kind notes from friends that just went missing. We're like, hey, I'm finally back. So that's good to see. And I'll talk to you again on Wednesday for the Wednesday check-in, and we'll see kind of where things go during this week. Keep in mind, there is some important news this week. This is what I'm going to leave you with. We do have some things to definitely pay attention to coming into Wednesday specifically. Obviously, the federal funds rate, I don't really think that there's going to be a change. But something that you are going to want to keep a close eye on for the economy here is when we're looking at what is coming out on Wednesday, this right here, crude oil inventories, right? Keep an eye on crude oil inventories. That's onshore inventories, right? And then on Thursday, keep an eye on natural gas storage. This is going to, kind of show us week to week pressures on inventories here, right? Obviously, the United States is massively exporting and taking advantage of exports, but keep an eye on those inventories because we want to see how quickly they are being refilled as the United States imports, Canadian, imports Canadian oil, Mexican oil, and Venezuelan oil, and how quick that turnaround is for refining, and then how much capacity we're actually putting out each week as it compares to consumption here at home, and then the export numbers that we're going to start looking at pretty soon as well. It's going to show us exactly how capable the infrastructure is here in the United States to handle what's coming in. I think it's capable. I think it's more than capable, but we'll see. We have to see that bear out in the numbers. We can't just purely speculate on it. We have already seen it starting to bear out in the numbers that it's actually been more than capable, but we'll see kind of where things go. All right, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please treat it safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.